Moving over to this now, the local markets and the rand took a beating today as investors reacted to lockdowns in China. There are also fears of interest rate hikes in developed nations. Faheema Adia, a market analyst from Momentum Investment, joins me now for more on this. Thank you so much for your time, Faheema. We do appreciate it. So it looks like markets have reacted to the possibility of further lockdowns in China due to an increase in COVID-19 infections. Perhaps tell us how the markets reacted to this today.
Good evening, Heidi. Yes, so quite a bad day today on the JSE, closing in the red, down almost 2%. So the resources and industrial sectors sold off the most. Like you said, it seems the market is being influenced by negative global sentiment. So the Fed did speak last week at Jackson Hole about tightening monetary policy and further interest rate hikes. And then we also had those high inflation numbers coming out of Europe this week. The market is expecting a 75 basis point interest rate hike in response to that, probably in the next week. On the other hand, the oil price was down today to about $93 after those China lockdowns. So China has implemented a further lockdown in Shenzhen after further COVID cases were reported there. Factory activity coming out from China also slowed over the last day due to all of those lockdown measures there in the past few months. So all of these things have kind of weighed on the global market sentiment and the expectation of a global slowdown, which has driven down that oil price. Then there's, of course, those talks with Iran to increase output, which has also contributed to that lower price.
Yeah, very worrying indeed. Let's take a look at some of the interesting company results. And first being Impala Platinum, they were affected by the ongoing mining strikes that we have been seeing over the past couple of months, but also load shedding.
Yes, Heidi. So reported a negative set of results for 2022 with lower revenue and profit. The output actually dropped by 4%. They've also lowered the dividend for the year. The market definitely didn't respond very well to that update. The stock price was down almost 10% in response to that. So it's mostly been driven by a number of operational challenges there. Rising input costs due to the high levels of inflation. There's been those supply chain disruptions, power cuts that you've mentioned, and also the community unrest. But, these challenges are not unique to Implats. We're seeing this across the mining industry. So a number of mining companies have come out recently now with negative results due to some of these operational challenges. The GM price has also been lower than what it was last year, which has bared on profits. On the positive, they are expecting that the palladium and rhodium price will remain elevated for the rest of the year due to pressures coming from that side. If we look at the RB Plats acquisition, they're also quite far along with that. Recently, they received approval from the government. And the last step now is just to get that competition commission approval. And we think this would be a very positive development if they are able to get majority control of RB Plats, as it's very good from a synergy point of view.
I want us to move over to Insure Group Santam. Their results were severely impacted due to the KZN floods and the riots seen last year. What is your take on this?
Yeah, so a very challenging first half of the year, Heidi. Headline earnings were down, mostly due to the lower underwriting results and investment income. That was massively impacted by the flooding in KZN. So they've said this has been the most significant natural disaster in its history. And they had a lot of exposure to that. So that definitely knocked results quite a lot. Then in terms of local and foreign bond markets, that volatility also weighed on the results, and lower equity markets impacted the investment performance. The dividend, however, despite this, was actually above last year's levels. In terms of the outlook, we're expecting that inflation and the high interest rates for the remainder of the year will, however, weigh on that company.
I want us to move over to Europe, and there's a very serious and huge energy crisis in Europe. Europeans are very scared that the price of energy is continuing to soar. How do you see the prices in Europe playing out, that being electricity prices? It's obviously got a lot to do with the Russia-Ukraine conflict, but how do you see that situation playing out?
Yes, so a very concerning situation in Europe at the moment with those rising energy costs, and it can definitely be described as an energy crisis, we would say. So as you're probably aware, Russia is one of the biggest suppliers of gas to Europe. And now with the Russia-Ukraine war and also those recent shutdowns of a major pipeline that supplies gas to Europe, Europeans are really struggling to secure enough energy before winter. And that's obviously pushing up the costs of energy and contributing to those high levels of inflation. It's actually gotten to a point where a lot of European countries are now being forced to restart some of their coal-fired power stations, which obviously isn't positive from an environmental point of view either. But yeah, quite a challenging situation there in Europe.
Very disturbing and quite worrying, but we'll just have to wait and see what the next couple of months bring us. Thank you so much for your insights and being with us this evening. That was Faheema Adia from Momentum Investments. I'm back.